In my previous video, I discussed what to do when a partnership is formed. Feel free to search it in my videos on this channel if you haven't seen it. However, in this discussion, I am going to talk about how to divide or share profits among partners. When a partnership is formed, there is a profit uh, that comes as a result of running the business, or there is a loss. How do we share this profit and loss? And this is shared according to the agreements and terms of the partnership when they came together, what they agreed upon. Okay, so in this first exercise, we have here, my pen quickly, Alex, I can't pronounce the last name, but Koyas and Shaunika. Okay, Shaunika Stevens. Okay, let me pronounce the Stevens will be easier. Form a partnership dividing income as follows. Okay, so this is what they agreed upon. They agreed that one, okay, annual salary, Steven alone is going to get a salary. Interest will be on their capital. Okay, so there's something happening with their capital balance. They're going to get interest, 8% interest on whatever amount the capital of those partners were. And then the remaining will be divided equally. Okay. Now I'm going to list information that I will need. Okay, right here, I've been told that, or we can see that Conyers and Stevens 50,000 and 160,000 respectively. So that means 50,000 is for Konya, and then 160,000 is for Steven. So I'm gonna list them here so I don't forget. Okay, so it's easy for me to see. Okay, so I have here Konya's capital as 50,000 and Steven's capital as 160,000. But what are they sharing? They are sharing net income. Okay, so the net income is going to be shared among these partners. The net income is 200,000. So I'm going to list the 200,000. Okay. Now I have the information I need for now. Okay, so I have my letter schedule here that I'm going to list Conyers and name Stevens, and then share the income according to the agreement. So number one, agreement number one, what did they agree to do first? Okay, so they say annual salary to Stevens 45,000. So annual salary is only to Stevens, so we have 45,000. Okay, so Conyers doesn't get any annual salary, so his is zero. Now, what is the total? The total is 45,000. Okay, good. Now we have here with this schedule at the bottom, that is where you need your total net income. Okay, you need to list your total net income here. So your total net income in this case will be 200,000, or you can ignore it and see if it will work out at the end of everything. So let's go ahead and reference the net income, which is 200,000. Okay, so at the end of everything, this plus this should equal 200,000. Okay, so let's see. So the first one, we're done with the first one. The total is 45,000. Now, next it says 8% on each capital. Okay, so we are going to have here 8% on each capital. So interest allowance 8% on each capital. So I have here 8% on this capital and 8% on this capital as well. So that is what each partner is going to get. 8% on how much capital they started the partnership with. So we are going to have with Conyers 50,000 multiplied by that 8%, that is 4,000. And then we also have Stevens, that's 160,000 multiplied by the 8%, that's 12,800. So we're going to add them together. So I'm just going to drag it here, and then it adds those two together. Okay, so we're done with number two. Okay, we have shared it. Number three, it says remaining. Okay, how do we find the remaining? Remaining is what is left after they have shared salaries and interest allowance. Okay, so we are going to find our remaining here. Okay. Oops. Okay. Yeah. Okay. So we're going to find our remaining by taking by adding all the total allowance and then subtract what the net income is. Okay. So we have our total allowance will be the total for annual allowance plus the total for interest allowance. So this is how much both of them have received. Okay. And you can add it in this way, this plus that. Okay. And if you would drag it, okay, that will give you the same answer. Okay. So how much? So far, can Konya's allowance is 4,000, Steven's allowance is 57,800, and the total allowance is 61,800. That's how much they have received in total. Now we want to find the remaining, how much is left. The remaining will be the total net income minus the total allowance they have received so far. Because this is our net income, and we have so far given them this. So we are going to have the remaining, that which is the difference right here. So that is what we are going to do to find the remaining. So remaining, we take the net income minus the total allowance, which is 138,200. Okay. And what is the term? They are sharing it equally. Okay. That is the term. That is the agreement. We are going to share the remaining equally. So we're going to take this. We take the remaining divided by 2, and that gives us that. And we'll take this one too, divided by 2. Okay, and you can double check and add them together, this plus that, that is 138,200. So that is correct. Okay, now our net allocation. So we will add the total allowance plus remaining income, and that is the total for what Stephen got. So we have Stephen has his total allowance plus the remaining, how much he got on the remaining. So we drag it here, it says 200. Okay, so in total, Steve Conyers had 73,100 and Stevens had 126,900. Okay, that is how much has how much is allocated to Conyers, 72,100, and Stevens respectively. Now, let's see if these two numbers equals 200,000. If it equals 200,000, that is perfectly right. Okay, so we have total of what Conyers get out of the net income plus the total of what Stevens get out of net income, and that is 200,000. So that is correct. Okay. So yes, so that is how you share net income among partners. Let's look at a little more complicated one. Okay. So here we have what do we have? We have we have two partners, but we have so many terms, so many scenarios. We have actually A, B, C, D, D, that is E. So we have 5 scenarios. Okay. So we have to assume what will happen if we use term A, what will happen if we use term B, what will happen if we use term C or D and E. Okay, that's what we're going to do. Okay, that's what makes it a little bit complicated, a little bit of work. So I'm going to go a little faster here. So still, I'm going to list these people right here. So we are talking about Jennifer and Megan. This time I use their first name. Okay. So the previous one, the last name is where a little bit harder to pronounce. So use the first names here. So now what is the assumption in the first place? Okay, let's read the question again. Okay, so investing 133,000. So we know Jennifer's investment is 133,000 and Megan investment is 110,000. So I'm going to list the investment. Okay. So now their total investment is the addition. I add those two together, that's their total investment. I'm listing them because I will need them to calculate one of the allocations. Okay. So now what is the net income? That's more important, very important, because that is what we are sharing. We are sharing the net income. That's 420,000. Okay. So I have my 420,000 net income there. Good. Now scenario A says no agreement concerning division of net income. Okay, if there is no agreement, then everyone should benefit equally. Whenever there is no agreement, it means the profit or loss will be shared equally among those two partners if there is no agreement. Okay, so no one is going to get cheated. Okay, so now what is our net income then? So that's the only one we need to worry about. So net income is 420,000 and we are dividing it equally. So we take this one divided by 2 and then we take this one 2 divided by 2. Or you can take this one minus that and that gives you the same answer. Okay, so we are done with A. Okay, let's go to scenario B. Okay, what will happen with B if we divide in a ratio of original capital or K? So ratio of original capital. We know Jennifer's capital is this, and then Megan's capital is this. So what is the percentage out of the total for Jennifer and then the total for Megan? Okay, from what we look at, Jennifer's investment out of the total is 75%. So Jennifer has contributed 75% of the total investment. And that is Jennifer's capital divided by the total investment. Okay, so 75% and Megan 25%. That's what we're going to do. So we're going to list how much her net income is. That's 420,000. And then we multiply the ratio. So that 75% multiplied by the net income, okay? And then 25% multiplied by the net income for Megan, okay? So I have Jennifer and Megan here. So in scenario B, Jennifer will earn 315,000 and then Megan will earn 105,000. Okay, so if we add them together, you can see this plus 105, that is still 420,000. So that is correct. Okay, just to check, so you will be very confident in that. Okay, so we have Jennifer and Megan again in C, scenario C. What is happening in scenario C? Right here, it says interest at the rate of 8% allowed on original investment. So they will receive interest at 8% on original investment, okay? And the remainder divided into a ratio of 2, 3. Okay, 2 and 3. Okay, good. So let's begin with the first agreement and the B and the C. It says interest at 8% allowed. Okay. I'm gonna have my here. So that means whatever their investment is from the beginning, they are going to get 8% on that. Okay. So they are going to get 8% on whatever their investment is. So I'm going to list the 8% here. I'm going to list another 8% here. Okay. So with the interest, Jennifer is going to receive 8% on that, and Megan is going to receive 8% on that. So that's what we're going to do. Okay. So now let's go ahead with the allowance. So Jennifer, 8% multiplied by what her investment was. And Megan, 8% multiplied by what her investment was. Okay, and we're going to add those two together. So we find the total. Okay. And then our total allowance for those two going to be the same number. Okay, so I'm just going to drag it all the way. Okay, that gives the same number, it's no different. Now, how much is remaining? What is the remaining? Okay, here we can ignore the net income right here at first and see if we will arrive at the same net income. Okay, so the remaining is 420,000, that is the net income, minus how much we have given them so far. Okay, that is the total. Okay, so that is the remaining of what is left after we distributed the interest allowance. Okay, and now what is the agreement on the remaining? How much do we share among them? The remaining says 2/3. Remember, notice 2/3. If we add 2/3 together, 2 plus 3 is equal to 5. So that means Jennifer is going to, let's see, okay, so Jennifer is going to get 2/5, and then Megan is going to get 3/5. That's basically what it is saying. Okay, so if we add the total together, that means that's the total 3 plus 5. 3 plus 2 is 5, and then we divide based on what Jennifer. So Jennifer is getting 2 out of 5, and then Megan is getting 3 out of 5 for the what we call it, the remaining. So we take equal to the remaining, multiply by 2 divided by 5. Okay, that's how we do it. 2 divided by 5, and that is for Jennifer. Okay, and then we do the same process for Megan, and Megan is that one multiplied by 3 divided by 5. Okay, now good. Now we have shared that we have the total allowance and we have the remaining income shared among them. Okay, now let's add those two together. So if you have this plus that, that gives you this. Okay, then all the way here. And now let's add these two together. So the total income for Jennifer plus the total income for Megan should give us 420,000. If it doesn't, then something is wrong. Okay, we don't understand. So we're going to add these two together, this plus that, and that gives us 430,000. Okay, if we add these two together too, that should also be the same number. So this plus that, that's also 420,000. So no matter how you do it, as long as you do it right, you're going to get the correct number. Okay, good. So let's move on to D. Okay, so D, I still have the names listed here, but what is the agreement that was made in D? Okay, this is salaries allowance 50,000 and 70,000 respectively. That is for Megan and Jennifer and Megan. So Jennifer is receiving 50,000 salary allowance. So let me reveal that and give Jennifer 50,000 salary allowance and Megan 70,000 salary allowance. And then the total will be those two. So we have the total. Good. And then what is the next? And the balance divided equally. Okay. So we have the total allowance here, which we drag it all the way that gives us that. And then we're going to have the remaining. So what is the remaining? If our net income is 420,000 minus how much we have already given them, 120. So that is the remaining. The remaining is 300,000. And the remaining, it said the remaining is shared equally. So we are going to share the remaining equally. This divided by 2. And then we have the same thing, that divided by 2. Okay, now what is the total allocation for each of them? Each of these individuals, Jennifer and Megan. So we add these two together, this plus that, and then we just drag it all the way, and then you can tell we have the 420,000 here as the total net income. So the total net income, the corner right here for the total net income should always equals to the net income that we were given. Okay. So, or you can do it this way to see if that is also correct. So you can double check by adding their total net income or their total allocation. And that's also 420,000. Okay, good. Now let's do the last one, E, because it's, so E, what is the agreement? Says, well, E here, allowance of interest. Okay, so they are getting allowance of interest. So allowance of interest, 8% on capital investment. Okay, so I'm going to begin 8% on capital investment. I'll be 8% on capital investment. Okay, so I'm going to take my 8% multiply by Jennifer's investment. Okay, and that gives me that. Oops, that disappeared. Okay, that comes back. Okay, so I'm going to do the same for Megan. So I will take the 8% multiply by Megan's investment. Okay, and I'm going to add the total together. Again, now that is the first agreement, comma. Okay, in the second agreement, salaries of 50,000 and 70,000 respectively. Okay, so I'm going to review my salary agreement. So 50,000 and then 70,000. Okay, and I'm going to add these two together. Okay, so that's what I have. Now, what is the next agreement? And the remainder divided equally. Okay, So now I'm going to add those allowances together. So we have this plus that. So those are the total allowances for, so this is the total allowance for Jennifer, total allowance for Megan, and that's the total for both of them. Okay. So how do I find the remaining? The remaining is I take the net income, 420,000, minus how much I've already allocated to them. Okay. So that is my remaining. Okay. And the remaining is divided equally. It says here remainder divided equally. Okay. So the remainder divided equal, I take the remainder divided by 2, because 2 is equal. And I take this one divided by 2, that is equal. Okay, so I'm going to add how much do they have in total. So Jennifer had total allowance plus the remaining this. So we drag it all the way. Okay, we drag it all the way here, and that gives us 420,000 again. So no matter how you do it, as long as you do it right, that should give you the same number. We have 420,000. Okay, so that is it for how to divide net income among partners. If you have any question, feel free to email me or comment, and then I will respond to you. There are so many ways of doing accounting, and whatever way you choose to do, keep practicing, and good luck on your test.